Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our fundamental video analysis segment. Let's begin with the equity markets. What a brutal session that we've seen over on Wall Street last night. All the major three indices, I'm speaking of Dow Jones, S&P 500 and the Nasdaq, they all plunged. Why? Because there was enormous amount of concern that the coronavirus is going to have a detrimental impact on the US economy. And it is because of that, the Dow Jones index, as you can see in the chart, dropped over 900 points, and similar plunge in terms of percentages we have seen over for the S&P 500 index as well. Now, I have done a special video about how to find or define that bottom by using the Fibonacci ratio, so please do go onto our channel and then look at that technical video where I'm using the Fibonacci, especially with respect to the Dow Jones and with the S&P 500 index, in order to find or to answer that question, if is the bottom in place or are we going to continue to move higher. Nonetheless, let's focus on the fundamentals. In terms of economic numbers, we had the Spanish unemployment numbers surged and then produced this flashing headline. But the thing is that we already know that these numbers, they are going to produce these flashing headlines. We already know that the numbers are going to be dire. We already know that the labor market and the overall economy is going to be in a difficult position. So nothing to worry about with respect to that. And I think because of this, we are seeing the upside, we're seeing the uptakes coming into the European market, because when I look at the DAX index and the other European indices, they are all trading in a positive territory, at least for now. But what matters the most is the 10 and 13% gains in the commodity space today. And of course, I am speaking of oil. As you can see in the chart, the Brent price and of course the WTI price, they have surged enormously. Why? Because Donald Trump has called in all the officials from Texas to come into the office today and to talk about curbing the supply. I think what he's trying to do is something which is unprecedented. He's trying to create OPEC++ committee, meaning that he is going to ask the executives to start curtailing the oil. It's so that we can save the energy sector, so that he can save the US shale oil industry from bankruptcies. Because for some of those companies it is already late, because they've already filed for the bankruptcies. But I am talking about widespread of these bankruptcies. So with those executives being in the office and having a discussion about curtailing the oil supply, and let's be fair, these executives, these energy companies cannot compete when it comes to the break-even price, what the break-even price is for Saudi Arabia. They are already underwater. They cannot continue to work and continue to produce oil at the current prices. So it will be in their best affair to agree to cut the supply. But I think Donald Trump is going to use this particular initiative and then go to OPEC, meaning to Saudi Arabia and to Russia, and then ask them to cease fire this supply war and then start curtailing the supply of oil. And it is because of this particular reason that we're seeing this massive surge. As I said in the chart earlier, that the prices are 13% for Brent, and for crude it is up over 10%. Now, going back to the precious metals, and I'm speaking about gold over here. When I look at the ETF holdings for all gold, all ETFs which are backed by gold, I see that they are sitting at a record high. Meaning, in the last previous days, we've seen that inflow coming back into these ETFs, and once again, the all gold ETF holdings are sitting at a record level. Meaning that investors are buying into this sell-off that we have seen in the market. They're considering that as an opportunity, because they know that with the loose monetary policy on their side and loose fiscal monetary policy as well, the only path for the gold price is skewed to the upside. And because of this particular reason, we are seeing these gold ETF holdings at a record high once again. So I maintain my view that any retracement, any pullback in oil, in a gold price remains an opportunity. And of course, with respect to oil, as I said earlier, I think prices, as long as they stay in between $20 to $22, is a huge opportunity with a massive upside. That's all for today. See you guys tomorrow.